Hey guys, how's it going? MC Fire here. Just wanted to give a small recap. Not really much happened post the Fed chair Fed chair minutes as of yesterday. So today, just wanted to bring a small recap and go over some of the posts in plays that I think were super valuable. So if you did catch the Fed chair, the Fed chair's deal, he basically, as expected, did not cut or raise any rates. That was definitely already kind of locked in there, kind of 97% rate that was a 97% chance that probably was going to take place, and it did. But one thing I wanted to note is where the Fed's focus is. So the Fed's focus is, hey, if the job market remains strong, if the consumer remains consuming, then I don't see a reason to hike or lower rates. Even if some outside influences like tariffs and prices, we'd have to wait and see for stuff like that. If we start to see mass layoffs, or if we see that the we start going to deflation, he might cut rates and take the pressure off of businesses there. So, really, if you were going to force the Fed's hand, it would be a lot of layoffs. It'd be a lot of hiring freezes and lower income. But a lot of that will be, well, they say a lot of that will be remedied because we're going to have a lot less individuals capable of, because of the deportation that could we'll have to wait and see for stuff like that, how that shakes out. So yeah, that's what's going on as regards to the Fed, and those were the meeting minutes as of yesterday. Those were really the key points. Of course, they asked a whole bunch of questions on, the stock market. They asked him a question about Deep Sync coming out. He really didn't have a comment on that. He said his job primarily is to curb inflation and to make sure people have a job, and that's what they're going to keep doing. So, shout out to the Fed chair. And here we go. So first on the list, we have good old Meta. Meta yesterday, actually crushing it today, pushing all-time highs. So watch out for that if you got Meta. Also, TEM actually triggering a potential play. Because remember, I told you guys up or down, we're watching this TEM here. So just kind of watch that as it did trigger high above that high, kind of peekaboo there. But remember, we are technically, according to me, in a downtrend. So the play that we're looking for is more of the down play. At that, have it test lows. You got to think it's making lower highs and lower lows, lower highs and lower lows. So what do we call that? The downtrend. So watch out for that. You got now earnings absolutely got throttled to the downside. It was pretty insane. Watching some of these plays just absolutely gap. And I will say that because it's an uptrend, just go ahead and track it this direction. Going back up, we love these kind of gap fill plays with our post earnings going above these giant red candles right here. It's a pretty decent play because you have this massive gap there. The market does like to come down and fill gaps sometimes. So might take a couple weeks, might take a couple days, but we'll be there and we'll let you guys know. You got DLR, kind of same deal, massive gap there. And it's in an uptrend, but do you see these gaps? They tend to drop into these places of support. Okay, so don't think that just because you have a gap or anything like that, you should not have been in this play whatsoever. And if you did, you probably should have took profits, right? If you, let's say you took this play at the DLR, right, seeing this candle, you probably already should have taken some kind of action or something like that, made the decision, rolled it. This is the information that we guys tell you about all the time. Notice that this would have been the first sign of danger for this potential play, right? So if you took it down here, boom, and if you're entering the new play, it would have had to be at the break of high. Didn't really happen. It failed. So now we just get to walk this puppy down. If it changes trend, which is probably very, very likely, then what you could see is waiting for the rip, and then we'll see signals on that end for that. You got TSM Shout out to Taiwan semis, absolutely getting gapped as well, but coming through pretty strong on breaking that gap. So we did get a peekaboo there, and all we do is we come in and we put the alert again. So we saw the peekaboo this morning, and we didn't want to take that because I figured it was a peekaboo. Get the break, nice retest. If it happens again, that's our trigger to go ahead and pull on getting this rotation. So definitely looking at TSM. It happens all the time where we get what I call peekaboo. Essentially, it goes up, it triggers your entry, and then it pulls back beneath it immediately. So sometimes it's just good to just be patient. Don't worry, that comes with time. That comes with just training yourself to wait for a retest. Okay, or waiting for like VWAP, waiting for after a major break, waiting for it to pull back to VWAP. That's how I know you get peekaboo, because things will push and pull back to the VWAP, and then you'll ask yourself, okay, why didn't I just wait for it to pull back to VWAP before getting it? The one you do that like several times, and you just kind of learn like, okay, well, it's gonna do that, right? Kind of case in point. Here we go. So as you see it push, it gets really far away. It gets far away, and then you think, oh, it's gonna go to the moon. It's gonna go somewhere crazy, to the upside. Sometimes it happens, very rarely, or not very rarely, but most of the time it pushes. It's gonna come back to a VWAP before it continues to push, or you're gonna see a 1/3 pullback on the push and then break. So you already get that here. So you get this pretty massive push out the gate. It goes sideways, and then it pushes, right? So it going sideways again. This pullback is well within reason, but it's like a 1-2 push. So 1, 2. So you're on the second part of that push. Pullback is very likely, very likely. So pulling back to VWAP, very likely. It did, and there's a tap there, a couple of taps. It actually breaks below there. So if we get above that level, shout out to us for waiting. We just want a little more confirmation. See here, I think we talked about TSM, MB, NDB. NDB, we're looking for that potentially to the downside. You did get that trigger. So that should already have been on your board for MDB from 2 days ago, having that alert there triggered yesterday. Note to you. So how would you play this? You definitely would take the entry there, and then stop out at the high and look for maybe a pivot low as a target there. Right. We also have MO. So MO, very similar story to a couple of the other ones. Earnings coming in, absolutely dashing hopes and dreams here. Earnings wasn't too bad, but the reality is how earnings goes is based off analyst expectations, not based off reality. So even though you might be improving, if an analyst comes in and says, instead of $1.29, you should be at $1.08, then you come in, even though it's slightly better or slightly worse, the market takes that as, oh my gosh, the sky is falling. So hope you like my impression of Chicken Little there. But essentially, that's how earnings. When you look at evaluations, you have to go look at what the analysts are predicting and then see if it beats that or if it does not beat that. But yeah, here just this kind of already gapped and goed. So downside play was definitely in effect there if you got it 2 days ago, and then you'd be taking profits right now. Shout out to you on Mo. Good old Google. So good old Google, setting up very nicely for you see this nice channel up here on the weeklies. Really, the most important thing is for you to know is wait for it to come down and pick you up. And if you before I chart that out for you, it came down here and supported this level or respected this level with this nice setup candle and a hammer. Right, that's really important. You see this hammer candle, and it goes bullish, right? Hammer and dojis tell a really big story, and if you can, and they are amplified. That story is amplified depending on where they are. So at major support levels are all-time highs. Hammers and dojis, man, they are almost screaming at you to make a decision, to get in or out of a trade. right? And so you see here as it comes down, nice setup candle right there, respecting support, and then there's a rally. Earnings are coming up. There is a squeeze in play. So Google could be a nice ripper to the upside. The reason why I said to the upside, you got unbalanced volume green. Yes, it's still extended, but I'm watching this. A lot of buying pressure stepping in and respecting that level. So just keep that in mind. IBM, absolute mind-numbing rip. Remember, we did take the break, did get stopped out there, and then this happens sometimes, guys. I'm telling you, happens more than you think. But I'd rather get it wrong, and then uh, just set my keep my rules, and that's what's going to work out in the long run. But yeah, mind numbing rips on IBM. We do like to show our winners, and we also like to show our losers and stuff like this. Sometimes it happens. Not everything can be just super go go go. In win win win, it'd be nice. But seeing this come in, it looked really juicy. The IBM was looking really really good. It just pulled back right below our 2 bar professional rollout there. If you say, okay, well, how are you clocking the 2 bar professional, right? So this is your 1 bar here, and or our entry candle here, and then boom, as it breaks the low, we'll go ahead and let it go. This is our setup candle that we're making that play on. So if I'm being a 2 bar professional, you, at the most you could put your stop here. That's at the most what you could do. Looking to preserve a little capital there. We set it here, and then it just rips. Happens, guys. Happens all the time. But you don't know. This is hindsight is 2020, and it could rip to the downside just as fast as it could rip to the upside. That's kind of the point. So without knowing the future, this was a great trade, even though it did not play out in our favor. We kept to our rules, and that's what makes it a great trade. CBRE. So CBRE. If you have CBRE, definitely, you have an opportunity to take some profits off the table here. Like rolling it, that's probably what we'd have done as a push, probably would have rolled here at the all-time highs. But you get CBRE, nice setup here, break, gap and go. The gap and goes don't necessarily like those because the timing for getting in is it's already gone again. It's already moved. So getting in, saw this play develop and gap. We didn't actually take that. You also got TSM in there. We'll pull that up. We'll add it to the list here. TSM. Look at him. We'll look at him for you guys. So yeah, shout out to TSM there. Yep, there is. This would be our entry. We'll go back and we'll put that in for you guys. About 2 shakes of a lamb's tail. I just want to get through the list here. We've got Microsoft and a Lockheed Martin. So Microsoft really doing a whole bunch of choppy business. Now, if you look right, even though it earnings and it dropped precipitously, um, what you're noticing is it dropped well within the line of reason. So the speed and volatility is good direction. You just have to keep in mind you shouldn't be long up here anyway. That's kind of the whole point. The whole point in taking a look at Microsoft is you shouldn't be long here anyway. If you're looking at here and you're like, oh, let's go long, look at the trend. What's the trend? The trend hasn't changed. The trend is rotational. So anything up here is a risk for Microsoft. And then what does it do? Boom, absolutely massive sell-off. Where does it stop? Where the trend is. So it's maintaining that trend. The trend is your friend. And you should respect the trend. So shout out to Microsoft. We weren't in that, so shout out to us too. Lockheed Martin, last but not least. We kind of told you guys this was a setup. Again, one of those gap and goes. Don't necessarily like to chase. If we didn't get our entry, the risk to reward is just way too high. That's really what it's about, is the risk to reward and maintaining a nice risk to reward profile. But yeah, this we were telling you guys was highly probable if it even broke this candle, which it did after hours and it ran. We knew that from looking at something like Netflix. I'm trying to get the ticker. There it is. I always forget this stupid ticker for Netflix. I don't know why. It's like I got dyslexia when it comes to Netflix. But anyways, um, these guys right here, kind of very similar story to the upside, right? Red candle, tighter red candle, and then you get a nice kick above that, and then boom, absolute explosion. Netflix runs to the upside, several $100, right? And so Lockheed Martin pulling one of those just to the downside, literally. Um, when you see this, it's almost picture perfect. Okay, so we'll come in here, we'll take a screenshot of that, and then we'll take a screenshot of good old Netflix. Got it that time. Why? Because we want to go ahead and start putting stuff like this in our playbook, right? Putting stuff like this in your playbook. If you don't have a playbook of things that like work extremely well, like I'll give you another example. We'll go to T. Stuff like this. This this right here in your playbook is crucial. As things sell off, right? Sell off in an uptrend, really deep sell off, and then you see a tight, juicy little red candle there getting washed with a nice risk to reward. We like these tight doji candles. As they get broke into the upside, they really have a rip effect going into earnings, right? So the boom, there's earnings, and then that's when you be pulling your play off, so to speak. Earnings can go either way, so it's kind of one of those things where you got to be careful. But even right here, first sign of danger, you can roll it to take a lot of profits off the table, and then it rips in your direction, and you get the play. So making the playbook and kind of building on that, you could add certain other plays like AVGO. But again, we kind of told you guys about Lockheed Martin that was the potential. It just gapped and go, and sometimes you gotta let it go, right? So AVGO, kind of same thing down here. This is what I'm talking about. A couple red candles down here. Had no problem holding it as a 2-bar professional. We had to look left for that. Stop. Not these, but lower than these right here, obviously, because these are the same length there. And then a massive rip going into earnings worked out really good for a 4 roll play for AVGO. So definitely, this is what I'm talking about. These tight bars that come in and they make a potential really good play as they start compounding in the same area, right? As they start compounding in the same area. Roll all the way to the right. I don't know why I did that. As these bars start compounding in the same area and they break, you get a massive push in one direction, right? The market's going to try to take that liquidity pretty quickly, and it'll see it. So, guys, thank you so very much. We appreciate your time. Keep trading, and also going into 2025, it's kind of flying, right? We're at the end of the month here already, man. This is 2025. We're at the end of the month, and the Earth still spinning. So just kind of watch out for that. But you guys are the best, and we'll tap in with you guys soon. Have a good day, and goodbye.